So friends, in this video I'm going to talk about the composition levy scheme. This is a scheme under which a supplier doesn't have to pay actual tax as required under section 9 subsection 1, but he has to pay tax on the turnover in the state at a fixed amount, fixed rate, and in lieu of that there are certain advantages, certain disadvantages. If advantage is concerned, this person is not required to issue tax invoice, he will issue only bill of supply. He will file only quarterly returns. He is not having anything like input tax credit, right? But negative aspect is that he cannot collect the amount of tax from the customer, and his customer also cannot avail the credit of the tax paid by the supplier who is already under composition scheme, right? So it's a matter of choice whether person is willing to go for the composition scheme or not. Provisions are contained under section 10 of CGST Act. Now, as far as section 10 is concerned, this is having overriding effect over section 9 subsection 1. Because under section 9 subsection 1 we talked about that every supplier will have to pay the tax at the rate fixed by the government on the supplies, but here we are talking about under this scheme the tax is payable on the turnover at a fixed rate. So there are no variation, there is no classification of the supplies, right? But section 9.3 and 9.4 continue to apply. What does it mean? Where a supplier has opted for composition scheme, though he is not entitled for any input tax credit, but wherever reverse charge is applicable, he will have to pay that tax actual on reverse charge. Under section 9.3 specified goods and services, under section 9.4 when the supplies are received by this person from an unregistered person, right? So section 9.1 is not applicable if composition scheme is opted, but 9.3, 9.4 continues to be applicable, right? Now this is eligibility. Who can opt for this? A supplier whose aggregate turnover during preceding financial year did not exceed rupees 50 lakhs, and this limit can be increased up to 1 crore, right? So friends, you can ask me a question, what is the limit as of today? The limits keep on varying because that is notification based, but these are the figures given in the section. These figures will always remain valid, right? notifications keep on changing. So by notification, as of today, this is 1 crore itself, right? So if you want to explain to somebody today, you can very well say if the annual turnover, the aggregate annual turnover of the associate or the supplier did not exceed rupees 1 crore during preceding financial year, during current financial year he is eligible for composition scheme, right? And here we have aggregate turnover. So aggregate turnover is the value of all the supplies, not only taxable supplies. So this includes value of all the supplies. So these are taxable supplies as well as exempt supplies, all will be taken into that account. And this is the turnover of the assessee of the supplier. This is not the turnover in the state. So if a supplier is having business operations in multiple states, then we will club the turnover in all the states to determine whether person is eligible during current financial year or not. So supplier whose aggregate turnover, so this is value of all the supplies, right, during preceding financial year did not exceed rupees 50 lakhs. Then he is eligible for availing the composition scheme during current financial year, right? And if this is the eligibility, and if he avails, then what? Tax rate under composition scheme. So this is one is for manufacturer. On manufacturer, CGST is payable at the rate not exceeding 1%. So CGST is 1, along with SGST it will become 2%, right? So on manufacturer this is 1%. Then as far as services are concerned, only one, that is supply of food and drinks, or you can say beverages, but this is excluding alcohol, because alcohol is not a subject matter for GST, right? Alcohol for human consumption. For that, the rate of tax given is 2.5%. So when it is 2.5%, effectively it becomes 5% along with SGST. And then we have other supplies. So for other supply, this is 0.5%, that is half percent. So here you can understand that this scheme of composition is available to the manufacturer, to the traders, but as far as services are concerned, only one category is eligible, that is supply of food and beverages. In that also, alcohol for human consumption is not covered, right? Because alcohol is not a subject matter of GST. So who is eligible? If the aggregate turnover of the supplier, who is the supplier? He is either a manufacturer or a trader, or if he is a service, then in this category. The aggregate turnover of the supplier during preceding financial year did not exceed rupees 50 lakhs or higher amount if prescribed by the government, but not exceeding 1 crore. Then he is eligible to avail this scheme. And if he is eligible, then this is the amount of tax which is payable, right? Now this is subsection 1 of section 10. In subsection 2 we have ineligibility, or you can say disqualifications for this scheme. Ineligible. So now we are talking about disqualifications. When a person is not eligible for this scheme. So number 1, service provider. He is a service provider, but other than supply of food and beverages, but this is eligible for composition, but other service providers are not eligible for composition scheme. Number 2, supply not taxable under this act. So if he is engaged in any supply which is not taxable under this act, and example we have already seen alcohol for human consumption, then also the person is not eligible for composition scheme. Number 3, interstate supplies. If the person is engaged in the interstate supplies, then he is also not eligible for composition scheme. Number 4, manufacture of specified goods. Now, which are these specified goods? These are ice cream, tobacco, gutka, pan masala. So gutka is not mentioned specifically, but tobacco products are mentioned, so that's why I have used the word gutka also, right? So if any of these situations, the person will not be eligible for composition scheme. In addition to that, non-resident taxable person, these terms actually I'll explain later on, as well as casual taxable person, these both not eligible. So these are not mentioned in subsection 2, but otherwise we have to understand, because as per section 24, these people have to be registered irrespective of the turnover. They have to pay the tax actual. So that is not in section 10, but otherwise you have to understand the non-resident taxable person as well as casual taxable person, they are not eligible for composition scheme. Okay, so this is about the eligibility as well as disqualification, right? I hope you have taken the note. Now here from we move to subsection 3. Subsection 3 says, if the aggregate turnover of the supplier during current financial year exceeds the limit given in subsection 1, from the very same day he will come out of composition scheme. On the very same day composition scheme will end, right? It means from that day onwards he will have to pay tax as per section 9 subsection 1. So this is end of composition scheme. When the scheme ends, on the day aggregate turnover of the supplier during the financial year exceeds the limit specified under subsection 1. Limit specified under subsection 1. So as of today, you can tell that if the annual turnover of a supplier during preceding financial year did not exceed 1 crore during current financial year, also he is eligible for a composition scheme up to rupees 1 crore. Right? Now what happens when the scheme comes to end? When the scheme comes to end. For that, I'll write one line: during composition scheme. During composition scheme, the assessee is not entitled to avail any input tax credit. Right? So how long the scheme is there? This is here. Till the turnover during the current financial year is not exceeding 1 crore. Right? Now, during that period, this supplier is not eligible to avail any input tax credit. Now, here we mentioned that the day turnover exceeds the limit, thereafter scheme ends, he is no more eligible for composition benefits. So from the very same day, he will become eligible to avail input tax credit also. Right? So when composition scheme ends, the supplier is eligible to avail input tax credit. Now he will be eligible to avail input tax credit for the entire stock there, and thereafter whatever procurements are, then there he will be eligible for input tax credit on all the fresh procurements after the end of composition scheme. Right? So that I refer as a transition. So transition from general to composition and from composition to general. Again, in both the cases, there is a difference in input tax credit. So here we said end of composition, this is in subsection 3. So this says on the day aggregate turnover of the supplier or the assessee exceeds the limit specified under subsection 1, from the very same day scheme will end. But during the period or during the scheme, there is no eligibility to avail input tax credit, but as soon as that ends, the person becomes eligible to avail input tax credit. I'll just give you a brief of input tax credit for the person who is under composition. I'm not explaining input tax credit in full here because that itself is a big topic. So as far as input tax credit is concerned, right, there I can divide it in two parts. From composition to general and from general to composition, because everything is based on turnover. Now if the person is moving from composition to general, he can avail input tax credit for all inputs in stock. On the very same day, he can avail credit for the inputs lying in stock. And if he goes from general to composition, he will have to make reversal of input tax credit. Now, how much reversal has to be done, when the reversal is to be done, that is not a subject matter of discussion here. Okay. So actually the question of input tax credit that is referred in subsection 4, I have already explained you that. Now coming specifically to subsection 4, subsection 4 says amount of tax cannot be collected from customer separately. That's why the person who is under composition scheme, he cannot issue tax invoice. That we'll discuss in detail when we come to tax invoice part, that is under section 31. He cannot issue tax invoice, he is required to issue a bill of supply. Reason is this, because this says amount of tax cannot be collected from the customer, but last word is important, separately, because this you can include it in the price, but you cannot collect the amount of tax separately. And this subsection 4 is also saying the person cannot avail input tax credit. So that we have already talked about in detail. Now coming to last part of this section, that is subsection 5. Subsection 5 says person not eligible for composition scheme. A person is not eligible for composition scheme but paying tax under section 10 subsection 1, that is as if he is eligible for composition scheme. So actually this is seriously an offense. What is the effect of that? First is he has to pay actual tax, and whenever tax is paid, certainly there is delay, that is along with interest. In addition to that, penalties are attracted, and section 73 74 also apply. Now 73 74 both are the sections for short payment, non-payment, short levy, non-levy, right? Under section 73 it is a case of mistake, under section 74 this is a willful default, and both the sections are having penal provisions as well, right? So those are the penalties which will be applicable. So I've just given you the structure of entire section 10, right? Let me brief it again. In subsection 1 we have eligibility and tax rate. In subsection 2 this is ineligibility, or you can say these are disqualifications. Subsection 3, this is end of composition. Subsection 4, no input tax credit, no tax invoice. Subsection 5, this is wrongly availing composition scheme. Right? So if you remember these titles, effectively you have understood entire section 10. Right? Eligibility based on turnover, annual turnover during preceding financial year all over the country. Right? Now one thing we have to understand, and for that I can take you as far as registration is concerned. For the purpose of registration, a separate registration is required in every state. And within the state also, if the person is having multiple verticals of business, then for every vertical of business there has to be a separate registration. Right? So registration number 1, separate in every state. And number 2, separate registration for every vertical of business. And for the purpose of law, every such person is treated as a separate person. But when we talk about the aggregate turnover, then all of them are registered under the same permanent account number allotted under the Income Tax Act. So the turnover of all of them will be clubbed together to determine the eligibility. Tax is payable within the state, but eligibility is based on aggregate annual turnover of the supplier. So this is also an important issue, and the supplier cannot do that in one state he is opting for composition, in another state he is not opting for composition, or for one vertical he wants a composition, another vertical he doesn't want composition. No, that cannot happen. So either he will have composition or he will not have composition scheme. A mixture or combination of the two things is not possible. So now we will talk about some more requirements for the person who is under the composition scheme. Right? Those are not part of section 10, but still we need to talk about because the rules are also there. So now I am removing the word section 10 because till now it was section 10. Number 1. No tax invoice, only bill of supply. Number 2, quarterly payment based on turnover in the state or union territory, because we already talked about earlier that the person who is under the composition should not be engaged in interstate supplies, but whatever is the turnover within the state, on that he has to pay the tax in that state, right? Because the place of supply will also be within the same state. So taxes will be payable state wise or union territory wise, but the turnover has to be seen in aggregate of all. Number 3, quarterly returns, and this return is GSTR 4. person under this scheme is liable to pay actual tax for inward supplies under RCM, because his rate is either 1% or 2.5% or 0.5% as far as CGST is concerned. So along with SGST, the amount will get doubled. But when he is receiving input supplies which are subject to RCM, then he will have to pay the actual tax and no credit for that amount also, right? Number 5, no classification. Whatever supplies he is making, it is payable on the basis of turnover, not on the basis of classification, right? So these are some of the important things. Now last and most important thing is display. I said this is most important thing, display. He has to display clearly at the place of business that he is under composition levy scheme, not entitled to collect tax from customer. He has to mention that display has to be clearly under composition levy scheme, not entitled to collect tax from customer. This display should be made. Okay, I hope I have explained to you the concept of composition scheme clearly. These notes which you have taken in the notebook, these are more than sufficient for any exam. Thank you. So friends, under the topic of levy and collection of GST, we are on the last video. And this is section 5 of IGST Act. Section 5, and this is IGST Act. You already have notes of section 9 in your notebook, and if you compare this section 5 with section 9, you will find that this is more or less identical. Only difference is that this is in case of interstate, right? So section 5, this is talking about that in case of interstate supplies. Subsection 1, this is IGST is chargeable at the rate not exceeding 40%. At the rate not exceeding 40%. Friend, this is rate of IGST is aggregate of CGST and SGST. That's why here the rates seems to be higher. So IGST is chargeable at the rate not exceeding 40% on all interstate supplies, right? Now we already know that interstate supply includes import also. So in case of import, this is up to clearance from custom area. or you can say until goods cross the custom frontiers of India, or you can say until goods are removed for the purpose of home consumption. It is regarded as interstate supply, right? So it is up to clearance from custom area, and this is chargeable as per section 3 of Custom Tariff Act. Under section 3 subsection 7 under the Customs Tariff Act, IGST provisions are there. And for this, now something comes important, value, this is as per Custom Tariff Act. Now here is the difference. In case of import, the valuation is going to be as per the Customs Tariff Act, but for all other domestic interstate supplies, the value is as per section 15 of CGST Act. So this is a point of difference in the valuation. For the purpose of domestic interstate supply, the valuation will be as per section 15 of the IGST Act. For the purpose of import, the valuation is going to be as per the Custom Tariff Act. And if you read Custom Tariff Act, for the purpose of IGST, the value is aggregate of the assessable value as per the Customs Act plus basic custom duty plus education cess plus secondary and higher education cess, and aggregate of all that. So that is assessable value under section 14 of Customs Act plus BCD plus education cess plus secondary and higher education cess on BCD. So aggregate of this will become assessable value for levy of IGST. So this is subsection 1 of section 5 of IGST Act. So this is only in case of interstate. Now interstate can be domestic, can be import. Domestic, when the location of supplier and the place of supply happen to be in two different states or two different union territories, or between a state and union territory, it is an interstate supply, and that supply is subject to IGST. In case of import, until the goods are removed for the purpose of home consumption, this is considered as an interstate supply, and that is subject to IGST. Rate is same, but the value differs. For the purpose of domestic supplies, the value is as per section 15 of the CGST Act, but for the purpose of import, the value for the purpose of IGST is to be determined as per the Custom Tariff Act. Okay, this is subsection 1. Subsection 2, this is regarding petro products. Petro products. So which are these petro products? Now you are already aware of. That is petrol, diesel, crude, ATF, as well as natural gas, right? These are not subject to GST as of now. So on these goods, IGST will be chargeable from the date notified by central government. So as of today, petro products are not subject to GST. So this is subsection 2, right? Then comes subsection 3. This is also similar to section 9, and this is talking about RCM. RCM generally. right? Then subsection 4 is when the supplier is unregistered and the recipient is registered, the tax is payable by the recipient. So this says central government may specify supplies on which tax is payable by recipient, right? So as far as RCM is concerned, in case of import all the goods, tax is payable by the recipient. As far as goods are concerned, this is all goods. As far as services are concerned, there is a difference in case of OIDAR services. OIDAR services, right? Services received by business entity. Then the tax is payable on RCM basis. When the services are received, OIDR services are received from outside India, and the recipient happens to be a person who is a business entity, so it is other than non-taxable online receiver. So government is a non-taxable, as well as any person not connected with the business, that is non-taxable, right? So that's why here I have simplified OIDR services received in connection with business, the recipient is liable to pay tax. Similarly, shipping services, in case of shipping of goods from outside India to India, the recipient is liable to pay tax. The recipient is liable to pay tax. So as far as goods are concerned, all the imported goods are subject to IGST, and the recipient or the receiver importer should pay the tax. As far as services are concerned, these are two services, OIDAR services received in relation to business entity, then the tax is payable by the business entity, and the shipping services received by for the transportation of goods by vessel, then the importer will have to pay the tax on those. So that is subsection 3. Now subsection 4, this becomes relevant. This is supply by unregistered person to a registered person, right? In this case also, tax is payable by recipient. So if you look at the structure of this section, section 5, this is exactly same as section 9. So you can make a table also. In case of section 9, those were intrastate supplies. In case of section 5 of IGST, this is intrastate supply. Otherwise, subsection 2 similar, subsection 3 similar, subsection 4 similar, subsection 5 is also identical, right? So subsection 5, that is e-commerce operator. Subsection 5, this is e-commerce operator. So in case of certain supplies being made through e-commerce operator, only e-commerce operator will be liable to pay tax, right? Who will pay the tax? For certain supplies through e-commerce operator, only e-commerce operator shall pay tax. And which are those supplies? Here I can simply mention one thing. This is same as under Section 9 of CGST. Which were the supplies? Transportation of passenger through maxi cab, through radio taxi, through motorcycle, hotel, inn, club, guest house where the actual supplier is not registered, maintenance, repair services where the actual supplier is not registered. So in those are the services where if those services are offered through the e-commerce operator, it is always the e-commerce operator who is liable to pay tax, right? And if e-commerce operator is present in taxable territory, that is India, then that is liable, right? And if not present, in that situation, appoint a representative or agent, and the person appointed as a representative or agent, he will be liable to pay tax. Okay, so this is section 5. Okay, now we can, as I told you, this is copy of section 9, so you can compare. So you can say levy and collection. Here comes to section 9 of CGST, and here comes section 5 of IGST, right? So entire structure is same, so you will have to, or rather you will not have to read the whole thing again. In subsection 1 we are talking about intrastate. Here we are talking about interstate. In this we talked about value. Here also we have value. Here we have rate. Here also we have rate. This is subsection 1 in both the sections. Then subsection 2, this is petroproducts. This is also petroproducts. Subsection 3, that is RCM. Generally, this is also same. Then subsection 4, RCM, unregistered to registered supply, this is same. Then number 5, e-commerce operator, this is also same. So this comparison is going to help you. Only difference is here, this is intrastate and this is interstate. What is additional here? In case of import, some different provisions are there, that the value and rate, and because that is chargeable as per the Custom Tariff Act, right? Now after this, only one more thing is remaining, that is section 14, that is about OIDAR services. Section 14, OIDAR services, right? Now this becomes relevant. Service provider outside India, recipient in taxable territory. Recipient is a non-taxable person and here we have recipient is taxable person. So where The recipient is taxable, that is a business entity. RCM is applicable, means tax is payable by the recipient. This is actually section 14. This portion where the recipient happens to be a non-taxable person, this is section 14, right? So this says tax is payable by supplier. Tax is payable by supplier. Now this supplier is outside India. How the tax will be paid? Same. So either they should have a representative, through representative, and if they don't have a representative, they should appoint an agent, and that person will be considered as liable to pay tax. So all the provisions which are related to levy and collection except exemptions, because the next chapter is exemptions. So the provisions related to exemption I'll take up later. So all the provisions related to levy and collection come to end here. Thank you.